Right. Okay, guys. Good evening and welcome back. Hope you guys can hear me properly, right? Make sure to turn on the videos and wait. So, today, I'm going to continue the reduction to control processes. In this chapter, we finished trial balance last week, correct? Right? We finished the trial balance. So, today, we are going to start the next part. Our next part is all about uh, correction of errors, right? This part. So we need to start the next part, page number 108, correction of errors, a new part, right? So now in trial balance also we discuss about correction of errors, right? So but in here we are going to discuss it in bit advanced, right? Okay. So right now I'll simply take the startup. Once a transaction happen, what is the next procedure? We prepare an evidence we call as business documentation. Another name, source documents. This is an evidence, right? Then after that we record in the set of books, books of original entry. In another word, prime entry books, right? So this is set of books. Out of books, we record the transaction in one book. Then after that, we record it in the ledger using debit and credit principle. Some books of original entry perform the dual function. So up to now, we discuss about nominal ledger, receivable ledger, and payable ledger, right? So after balancing the ledger, we prepare the payable. With the accounting process we studied up to now. Got it? Send me a thumbs up, right? So hope you got the idea, right? Leashia, hope you are there, right? Okay, guys. I'm audible. Can you hear me? Right. Now, when it comes to the trial balance, like this, if I take this one as the trial balance, this is debit, credit. So the same trial balance I'm taking to, right? Debit, credit, trial balance, trial balance. Sometimes, the trial balance telling I'll take 1000 to here, side also 1000, which means trial balancing is telling. Sometimes trial balance is not telling 1000 in here, this side can be 900. Trial balance agrees, debit and credit. Trial balance disagree. Disagree means errors in the accounting process. Errors in the accounting process. Trial balance agrees. Though the trial balance agrees, there can be accounting errors. Right? Trial balance agreeing doesn't mean accounting process is 100% accurate, but there can be errors in the accounting process though the trial balance agrees. Okay, let's see. Go to the book. Learning objectives. Identify and explain errors that do and do not affect the balancing of the trial balance. Errors that do and do not affect the balancing of the time. This is errors that do not affect the agreement of the trial balance, right? Errors that do not affect the balancing of the trial balance. This is errors that do affecting the agreement of the trial balance. Why? Because of those errors, trial balance disagree, debit and credit total, right? We have prepared many trial balances. Hope you can prepare the journal entries and correct entries. Prepare a suspense account. Getting started. Let's see. In this chapter, we will learn about the mistakes that can be made when preparing accounts using double entry. This can be a particular challenging topic for students as some errors are not revealed by the preparation of the trial balance. This can be confusing as the trial balance is supposed to balance. Remember that this is the weakness of the trial balance. Just because the trial balance does, means it's just because it balances this means does not means it is correct. Though the trial balance agreed, there can be errors. Errors not revealed by a trial balance. In here, this for this one we call as, for this category we call as errors that not revealed by the trial balance. Not revealed by the trial balance. Not revealed means not revealed by the trial balance, which means trial balance agrees, but there are errors. Got it? Hope you can manage, right? And there is another category we call as errors affecting the trial balance agreements. Errors affecting the trial balance agreement. Affecting the trial balance agreement means trial balance is not agreeing because of this. Got it, guys? Right. So finish it and raise your hands. Write this from the beginning and raise your hand. Okay, I want this to write. Can you hear me, guys? Send me a thumbs up. Right. Make sure write and raise your hands. If there's any concern, let me know. Right. Done, Diashia, and there's another one. Done, right? Right. So this is all about the summary, right? So now we are starting from the errors that not revealed by the trial balance. Okay. Simply, what is the means errors that not revealed by the trial balance means what? Trial balance agree, both sides are balancing, but there are errors in the accounting process. Turn on the videos and wait, please. Hope you can hear me, right? So let's write the subheading. Write the subheading errors not revealed by a trial balance. Write the subheading errors revealed by the trial balance. Got it? Right. So let's read. So you have learned the trial balance will appear to balance even if certain errors that occur. Remember the acronym top coco, right? Top cock, right? So to remember you to the different types of errors. So how to remember? Right. First one, errors in of transposition, right? So errors of original entry, right? Errors of principle, right? Complete reversal of the errors, right? Then errors of omission, right? Errors of commission, right? Compensating errors. How to remember, right? So errors that not revealed by the trial balance means trial balance agrees, but there are errors. So remember the word. Just don't write. Look here. Right. So what is the term called? T, error of transposition. Error of transposition. I'll explain one by one. So what is the term called error of transposition? When a number is recorded incorrectly on both sides, transposition means like instead of writing 1 2 3, you write 3 2 1, right? So trial balance is telling, right? But uh, the trial balance is telling, but the accounting process is incorrect. Now think the actual value is 1 2 3, but we wrote as from the opposite side. You know, for an example, take about ambulance. Now in ambulance the name written from the transposition side, the opposite side. Why? Because it's for the mirror purposes, right? Can you hear me, guys? Am I audible? Right? Send me a thumbs up. Right? Turn on the videos. So transposition means like other side, right? 1 2 3 we wrote as 3 2 1. These are actual one, but we wrote as 3 2 1 debit, 3 2 1 credit, right? We wrote a higher value than the actual value. Once we prepare the trial balance studying. Why? There is a debit and credit. To balance the trial balance, there should be one debit entry, one credit entry. Trial balance is balancing, but the accounting process is incorrect. Why? We recorded a wrong value, right? So that is the term called transposition. Transposition error means right? So right, so means when the uh, number is recorded incorrectly, when the when the value numbers recorded incorrect, incorrectly means opposite side. Oh, errors of original entry, error of original entry. Original entry means what? When an item is entered using an incorrect amount. For an example, an invoice received showing goods purchased to a value 260 is entered in both the purchase account and supplies account at 260. Now transposition means side change. Original entry error means like 260 is the original value, we wrote as 260. This is not a transposition. Why? If it is to be transposition, we write 0 to 062. But mistakenly we didn't see the 0, so we wrote as 2626. Got it? You can't write like this. If you write 26 and 260, it is not the category of errors not revealed by the trial balance. If you write 26 and 260, there are, in both debit and credit, there are two values. Two values means trial balance disagree, not tally, right? So trial balance agree means same side, but not the actual same value, not the actual value, right? So transposition means when an item is entered using an incorrect amount. When an item, when an item is entered using an incorrect amount, right? Next one, errors of principle. When an item is entered in the wrong class of accounts. Now up to now we recorded in the correct accounts, but now think purchase of stocks, sorry, think like the purchase of motor vehicle. What is the double it? Cash book credit, motor vehicle account debit. But mistakenly we recorded as cash book credit, purchase account debit. We can't debit the purchase account when you purchase a motor vehicle for the usage purpose. Got it? If we purchase a motor vehicle for the usage purpose, we need to debit to the motor vehicle. Basically, you said me that, right? Mistakenly, we recorded in the purchase account. So it is a principal error. There are both entries. There are both debit and credit entries, right? So one debit entry and one credit entry. But think this is the correct account, but we debited to the incorrect one, right? So that is the term called errors of principle. Error of principle. Principal error means when an item is entered using when an item is entered in the wrong class of account. Item is entered in the wrong class of right? Next one, complete reversal of entries, which means that when the correct amount are entered in the incorrect accounts, but each of the shown on the wrong side of the account, right? When the correct amounts are recorded in the correct accounts, but each item is shown the wrong side of the account. Now see, it's like this. So when we purchase a motor vehicle, cash should credit, motor vehicle should debit, but mistakenly we recorded credited cash book, sorry, credited motor vehicle account, debited cash book. We just, this is the correct entry, but we recorded other side, opposite side. Understand? So this is the term called complete reversal of entries. Tableau is telling, right? This is the correct side, but we record as incorrect side, right? So we call as complete reversal of entries. Complete reversal of entry means entered correct amounts, comma, correct accounts, but wrong sides. Turn on the videos, huh? Hope you can hear me. Right. Errors of omission. Transaction completely omitted from the books, we call as errors of omission. Completely omitted. We are not recorded. So which means trial balance is steady. Right? Transaction is completely omitted from the errors of commission, wrong account. When the correct amount is entered, but the wrong person's account or wrong account. For example, sales of J. Robert is entered in the J. Robertson account, right? So now you may think it is kind of a principal error. Like in here, wrong account is relevant to the like payable ledger or receivable ledger. That's why errors of commission. Commission. Correct amount is entered, but wrong person, wrong account. Finally, compensating error. What is the term called compensating error? It's like this. The two or more errors are cancelled off by two other entries. These can be the same side or opposite side. It's like this. Look here. I'll explain it like this. Now, think our transaction value is like this: 1000. In one, we there are two entries, 1000 two entries, right? We recorded like this: one account 1000 debit, 100 credit. In here, 100 debit, 1000 credit. In here, the wrong is in here, in this entry. In this entry, wrong is in here. You can see, if because of the first one, this is the first one, this is the second one. Debit side 900 deficit. So credit side 900 deficit. Because of this one, debit side 900 deficit, which means compensating, which means both sides deficit set off. Trial balance is telling, because of this transaction, credit side deficit 900. Because of this transaction, debit side deficit 900, which means trial balance is telling, because there are same deficit or the excess because of two or more transactions. Because of this error is cancel off. That's why, right? Can write, when two or more errors are cancelled off by two other entries. When two or more errors are cancelled off by two other entries. Okay, finish it and raise your hand. Write it and raise your hand. Okay. Once you done, raise your hands. So if you done, right? Now you can see examiners like to ask question about how the correction errors will affect the profit for the year. The transaction has no effect on the financial statements, tell the examiner. Use the acronym top coco in the exam. Write it down sooner as the exam starts. Okay, I'll give you few minutes. Can you hear me, guys? Send me a thumbs. Right. I'm going to give you few minutes. There are example for each error. Please read, right, and raise your hands. I'll give you like 8 minutes. I want you to read the thing first. Every time I'm telling and you are just listening. I just want you to write. Just read. Wait, I'll make the screen, right, and I'll send the PDF. Yeah, I say I have sent the PDF to the chat box as well, right? Time started. Done, right? Okay, let's see one by one. Right. Errors that not affecting the agreement of trial balance. Okay, example for each shown below. Errors of omission. Omission means what? You know, errors of omission means transaction is completely omitted. A Chang paid 25 by check on 18th March 2017. The transaction was entered correctly in the cash book. Cash book credited. What was entered mistakenly in the account of A Chang. The trial balance will still balance because it is debited 50 and credited 50. Uh-huh. So, right. So, this is not the, this is commission, error of commission. Errors in the right, wrong side, not the commission. Omission is commission. You can see. Now, the transaction is cash credit. A Chang should be debit. A Chang is a creditor. That's why when we are paying, credit liability decrease. But in here, you can see what we have done. We have credited the bank account and cash book, you know, in the same column. We debited mistakenly to another account, right? A Chang, not Chang, right? So what we need to do, we need to credit the A Chang's account and debit the A Chang's account. Credited to A Chang's account, debit A Chang account, right? To cancel the out the error on the credit side of the account, to enter the amount the correct account. You can see. So mistakenly we recorded in here, right? Mistakenly we recorded in the Chang's account. You can see Chang's account. We debited, we credit here, right? And we debit here, right? So you know, we need to record in the Chang's account here. We credit here, we debit here to remove it, right? A Chang's account debit, Chang's account credit, right? Errors of principal. The motor car is purchased 35,500 by check. It is debited in error to a motor expense account. In the cash book, it is shown correctly. The trial balance will still balance because there's a debit 35,500, credit 35,500. Now you know, when we purchase a car, right, motor car, so bank credit or the cash book, the same thing. Motor car account should be debit, but we mistakenly debited to the motor expense account. So what we need to do, we need to credit the motor expense account, debit the motor car account, right? So to record it. Errors of original entry. So errors of original entry means opposite side. Revenue, uh, sorry, original entry means incorrect amount. Revenue 150 for to C Chang on 13th May 2017 is entered as both debit and credit 130. The actual value is 150. We recorded debit 130, credit 130. So which means there's a 20,000 deficit, 20 deficit in both sides, right? So what we need to do, we need to debit in here 20,000, credit in here 20,000. That's why then the account increase up to 150,000. Errors of commission. Commission means completely omitted. A purchase goods from OK, right? So 250 on 30th May 2000 is completely omitted from the books. This error is found on 31st May 2017. The corrected account and journal entry are shown below. You know, completely omitted means, you know, to debit purchase account, credit OK's account. Then we recorded. Compensating error. A business books contain two incorrect total, purchase and revenue. The purchase day book add up to 100 too much. The same time, the sales book also add up 100 too much. So you can see, so this is the thing. To remove it, we need to add too much, which means add up 100. Okay, so to remove it, we credit it in here. So in here, to remove it, we need to debit, right? So revenue account debit, purchase account credit. Complete reversal means, I told you, it's like opposite side. On 28 May 2017, a check for 200 is paid to AO. This is entered to the accounts as shown below. You can see. So, right. Sorry, complete reversal means the opposite side, right? Opposite side, right? When we pay cash book credit, AO should be debit, but we recorded on the other side. To correct it, we need to record 400. That is the thing, right? So 400. Why? When we actually, what we need to do, we need to debit 400 to here. Once we debit 400, this 200 will cut off and another 200 will remain in here. Once, now the correct side is these two. What we recorded as these two. Easy, clear to you guys? Send me a thumbs up, right? The correct side are these two, but we recorded these two. To remove it, we need to debit 400 to here. Why? Once we debited 400 to here, right? Hope you can see the mouse. Once we debited 400 to here, right? This 200 will cut off and another 200 will remain. Once we credited 200 to here, this 200 will cut off and another one will remain in here. That is how we, right? 400, right? So hope you are okay with here up to these things. There are examples you can see. If the error caused by complete reversal only, the amount will always be doubled in both accounts during correction, right? So just remember. Let's do this one like Saturday, then we can finish the lesson. Okay, guys, right? I'm finishing bit early today, right? Because I'm too tired today. So I had some works during this, right? So, and I did some classes for levels as well. I'm going to wind up bit earlier because we are doing Saturday and Sunday both. Got it? Send me a thumbs up, right? So we are meeting Saturday 9 a.m. And Sunday, I'll see, because Sunday is the poor day, but I'll try to do it. So most probably I will be, but I'll check and tell you, right? Okay. Thank you for the participation. Good night. God bless.
Bye. Thank you, sir. Good night, sir.
Bye.
Thank you, sir. Bye.
Bye.